Well, good afternoon. Good afternoon and welcome to another Webinar Wednesday. It must be Wednesday. It's Webinar Wednesday hosted by the Cal State Bakersfield Small Business Development Center. This is webinar number 328. We are going to be talking small business finance, some great programs that, even I didn't even know about until this year. We'll get on with that in just a few minutes with our special guest today, Penny Garton. What is up today? Today, November 20th. Today, November 20th already. Thanksgiving, a week away, week and a day. Well, we're going to be talking today about some swell new lending programs. If you're looking for capital, you've come to the right spot. We'll be talking and bringing on our special guest in just a few minutes and talk a little bit about all of the fine programs that are offered and unique programs at that. Fine and unique. We will also provide an update on the SBA disaster relief program for the Borel fire that burned about 60,000 plus acres in the Kern River Valley above Lake Isabella. Talk a little bit about that and how maybe it can actually provide some relief for your particular business or your residents. Big changes from government for small businesses as we've had an election, and that's what happens after elections. We will talk briefly about some of those things as we will in the next few weeks and months about changes that are going to be occurring for small business. Our capital quarter today has a little bit of that detailed SBA disaster loan information. One of the compliance alerts that we've talked about for a long time on Webinar Wednesday, which is the business ownership information form. It is due, and we'll talk somewhat about that today. Economic Corner is going to focus on some of the tariff impacts for businesses. One of the campaign pledges for President-elect Trump was to actually increase tariffs back like he did in 2017. We're going to talk about some of maybe the short-term solutions and some of the longer-term impacts if you significantly do business with China. Our tools and information and resources, with the real highlight those for you and give you access to a lot of the toolbox that we work with. Your questions today will be answered live after the presentations. All resources will be put into the chat box today, so we'll talk about a lot of resources. They will find their way to the chat box, courtesy of our webinar producer, Maureen Busher-Dang. And we do have a poll today. So let's jump into our poll today and jump into that very first question. And it's going to be very topical today. Just a couple quick topical questions. Nothing too outrageous out there today. But our first one is just going to want to know how much funding you need. If you need a small business loan, which you possibly do, that's why you're here today. How much do you need? Do you need under 25,000, 25 to 100, 100 to 500,000, over $500,000? Exactly. How much do you need today? So again, it's how much do you need? It's not always how much do you want. As we find out, sometimes the need amount is easier to obtain with small business financing than really ideally how much you want, but really need, want, how much money are you looking for? So we do have 66% of you that have participated in the poll so far. Thank you for jumping in. And what we're going to do is give you another moment or two to jump in and complete our very first actual poll question. And a nice round number on the poll for a moment anyway. And we're going to jump in and end the poll right there and share the results with you. And 45% of you are looking between 25 and 100,000. Another 27% are looking for 100 to 500,000, 18% over $500,000, and 9% of you under 25,000. So thank you. That will be good information for our upcoming presenter. And one of the topics, one of the topics always seems to be around small business financing is how much do you want to borrow? So let's jump to our second question, and this is one we're going to ask over the next few weeks, a variety of these outlook questions with the new year just around the corner. So what we're going to do is open this particular poll and launch it. Or maybe we're going to launch it. And let me try going back one more time here. And here we go. And it's basically your business outlook for 2025. Is it bleak? Is it concerned? Are you concerned? Cautiously concerned? Do you think it's going to be very good or good? Good or very good or fantastic? So your business outlook, and that's going to be your profitability, probably first and foremost, your cash flow, gaining customers, moving forward. And basically, we have, good, bad, indifferent, really bad options. So number one is bleak. Number two is concerned, and that's cautiously concerned. Is it good or very good, or is it fantastic? We do have 52% of you. Everybody's got to have an outlook. So please jump in and vote. And we'll give you just another moment or two. Is your business outlook for next year bleak, concerned, good, or fantastic? And with that, 62% of you participating, we're going to go ahead and end the poll. And we're going to share the results. And oh, wow, look at the results. Pretty good. Pretty good. 64% of you are concerned. You are concerned about the business outlook and a lot of the things. 36% of you are say it's going to be very good or good, and 9% fantastic. So that is great. Thank you so much for participating in our two polls, and along we go. Okay, so one thing, as we have talked about for a long time, it was extended, is the filing that is required for the beneficial ownership information. If you recall, this was created by FinCEN, which is an acronym for the Financial Crimes Enforcement Network. And what it aims to do is identify those entities that have 20 or less owners and try to eliminate a lot of the illegal activities that happen out of those by not knowing who actually owns those entities. And those entities could be S corporations, they could be C corporations, they could be LLCs. There even can be an instance where a nonprofit that has a for-profit activity needs to file. It could be a limited partnership, for example, also. So there's a nice 5-minute demo on the page, a lot of resources. We'll get more information. This all came about because of the Corporate Transparency Act, the CTA, and was legislation that will actually come with some pretty stiff, heavy fines if you do not file this by next year. The fines are based per day, and if you go a whole month without paying, it's like $16,000. Now, obviously, with a new administration coming in, these might change. We're still encouraging people at the SBDC to go in and to do the business ownership information. We're assuming, since it does cut out illegal activities and is really the first step of the government to really kind of get that under control, a lot of different illegal activities, that it'll probably stick around. So that is a little bit on that. We'll be talking a little bit of that as we get closer to the end of the year. There's some great resources. Maureen will put those in the chat for you if you want to. A lot of people started doing this as early as January 1. So if you're a new business that is actually just filed an LLC, incorporated in or other entity, then you are required to do that within 30 calendar days after you go into business. So you want to make sure you get this all up and current before next year. For existing businesses, it was delayed until 2025. but still you have until only January 1, 2025 to get this legal filing done. Our capital corridor, our capital corridor is one of our two columns that we do every webinar, or usually most webinars. And this is just going to be briefly on the Park and Borel fires, the disaster planning that is going on there, and disaster relief efforts. It was named a SBA disaster for injuries and also damage that occurred between July 24th and August the 26th. We have some due dates coming up. A month from today is the last day to actually file for physical damage. Physical damage would be which would be caused by the fire, by the smoke, or by other aspects of the particular fire itself. Could be water damage caused by the fire. So a lot of different things that can actually jump into physical damage. And then we have a considerably longer period of time to determine if you were economically injured. And that's not always going to be people that are located in the Kern River Valley above Lake Isabella in the fire area. That could be someone located in another county, for example. But because of the damage, the physical damage that occurred there, their business has been impacted. So you see the rates and information that's available. We also can see that there's a variety of people that can apply for the disaster loans. The SBA disaster loans not only goes for businesses, but it also goes for private nonprofits and also homeowners and renters who have suffered a particular loss. It's one of the few programs to where, your house can burn down and you can get an SBA loan for it. So some of the limits and some of the options that are available, we have the business loans are for businesses and private nonprofits, and the purpose is to repair or replace real estate. You could have lost some inventory that burned or some equipment, or you could have actually, been outside the area and had equipment that was actually being used in the fire zone area that was impacted. That will go up to $2 million. Also, the economic injury, where I think that we're going to see more and more of those that are popping up, small businesses and private nonprofits, your working capital loans. And that is what that is for, is to replace the working capital that you have lost. So if your business has significantly lost revenues, you can actually get up to $2 million for an actual loan amount. And then for your repair or replace your primary residence, up to $500,000, or to replace property. You could have been a renter, for example, and you lost your property and it was uninsured. That can go up to $100,000. The great thing also about the disasters and where SBA has moved in these areas is for mitigation. So both businesses and private nonprofit homeowners, etc., you can mitigate future losses against any disaster. And actually, you can have 20% of your verified damage to where homeowners can actually borrow up to $100,000 to put in mitigation efforts to actually prevent potentially a disaster in the future. So our economic corner today, hope to have our resident economist back on webinar Wednesday. We'll let some of this presidential news coming in and some of the other stuff happen. But until then, one of the things that seems adamant is going to be that 60% tariff that may be coming on goods imported from China. We did see this back around 2017 and 18. And one of the key strategies back then for those that had, essential items that you needed to import for China, either to resell, or actually to use in your manufacturing or distribution processes, a lot of individuals would front load that. And by that, we mean that they would purchase larger sums that wouldn't be subjected to the 60% tariffs. Now, that is not really a longer term solution if we're looking at multiple years of the 60% tariff being in place. So businesses really need to look at it as if they are an active China trading partner. They need to start looking into other longer term solutions. Some of those might involve looking for other suppliers, perhaps with Vietnam, Cambodia, India, and other countries have been suggested. But really, it's something that, I've talked to people that have had, Chinese relationships as far as the supplier or vendor relationships for many, many years. And it's difficult for a lot of those. And really, if it's the essential part of your business, it's one of the things that you need to look at. But don't forget that other countries are going to be subjected to the 10 to 20% tariffs that might be imposed on imports from other countries. So there's that 10 to 20% that will be on other countries. And if it's 20%, then your net tariff increase is going to be what, 40%? But economists also warn about an inflationary aspect. And the inflationary aspect only isn't for the US, but it is going to be for those Asian countries also that could be also affected. And you'll see other things like a stronger dollar. Usually, when we had inflation, you saw the strong dollar and how it represented overseas. And that's your economic corner for this week. We like to tell you that SBDC free membership has its privileges. SBDC free membership is just be able to sign up as a client. You signed up for a webinar because you're here, but you can also sign up for free one-on-one business advising, and that brings the membership tools to you. And there's the website address where you can jump in and talk to one of our advisors for no fee. And some of those tools that you would be able to experience are going to be some great tools in here. There's our SBDC Net, which is our market research tool, to where we can commission from our national clearinghouse in Texas information on market analysis, market research, your competition, potential market share, etc. We also do an industry-based analysis with our vertical IQ. Our live plan. Our live plan is a intuitive live plan software that actually is used for business planning purposes. Wonderful tool involving AI. We also have a number of forums and other things that can assist you, such as our Clayton Leadership Transition Plan, our cash flow forecasting, and also don't forget about our YouTube channel where all of our webinars go to rest. So again, contact us for any of those particular items. We can discuss what's next with our expert consultations with you and work with you on a one-on-one basis. And that brings us to our program today, which means our program is going to consist of today's special guest. And Penny Garton is a 33-year veteran of commercial lending. She's done some underwriting, which is important because she's done the part that actually jumps in and approves or doesn't approve loans based on what, a lot of commercial lenders will send her. The customer service throughout Northern California. She is based here in the San Joaquin Valley. She's now part of CDC Small Business Finance, #1 community advantage lender in the nation. Community Advantage is a great program that SBA has. You'll hear more about it in the coming minutes. And she's committed to finding small businesses financing for exactly their needs. 12 years of experience in small business lending, many of those here in the Central Valley. Takes into account client needs along with their plans. And that's important because what you're planning for today could be very different tomorrow and later on. So, Penny, it's great to have you here today. Penny Garton, come on in. We allow you to share your screen and jump on in here and take it away.
Okay, great. Thank you, Kelly. Hello, everybody. Okay, so as Kelly said, I am Penny Garton. I work for CDC Small Business Finance. We are not a bank. We are a certified development company that does predominantly government lending, and majority of that is done through one of the SBA programs that is a nationwide loan. So here's what we're going to talk about today: access to capital for both business owners and entrepreneurs. So if you're a business entrepreneur looking for capital to get your business launched or your doors open, you're almost there, there are programs out there that can help you. So keep that in mind. So we're going to talk about the various lending institutions, what they do, what their specialty is, how to prepare for your loan request, some general information, and talk a little bit about some projection-based loans as well. And as we all know, the projection-based loans, when you're needing to do projections or business plans, make sure you reach out to your local SBDC center. They're there to help you. And remember, it's free of charge. So let's go forward. All right, so here are the various lending institutions. A lot of folks aren't sure. A lot of folks will go to Google, or you'll walk into your bank and think, oh my gosh, they don't do startups, or I haven't been in business long enough, or my loan amount's too small. That seems to be the premise post-COVID. So I can tell you from being in the industry for 37 years, it changed quite a bit post-COVID. So don't feel defeated. There are institutions out there to help you. And so I'm here today to kind of help guide you through some of those, and happy to answer questions. All right, so traditional commercial banks, we're talking about community banks, the large global banks like B of A, Chase, Wells, all of them. Their minimum loan amounts have increased due to overhead cost, in case you're wondering the why. That's one of those things that changed post-COVID. They used to be able to do smaller size deals. I came out of that industry, so I can tell you that firsthand. Most of the traditional banks are going to require collateral. They're also going to require what we call a minimum debt service coverage of 1.25. So for those of you that have ran across being told those ratios, here's what it means. When we are looking at business cash flow, which is like a debt service ratio, we are talking, we want to see the business have $1.25, which is what that 1.25 stands for every dollar of debt. Okay, that is traditional numbers for all majority of the commercial banks, your traditional banks. Now we'll go down to the CDCs and CDFI lending institutions, and that's the entity that I work for. Again, CDC stands for Certified Development Companies. There are several throughout the nation. I believe there's somewhere around 200 and almost 280 of them. And then there are CDFIs, which are a little bit smaller. We happen to also be one that stands for Community Development Financial Institutions. And we tend to specialize in the non-traditional business lending, government lending. Sometimes there's a funding that comes through, like maybe the city or a county or the state, or even entities like FedEx, and they need somebody to administer those loans. They don't go through the banks, they go through the CDCs and the CDFIs. So your minimum loan amounts are going to vary based on those programs. And then your maximum is going to depend on the programs that are being used. For example, my company's minimum loan amount is $30,000. My maximum loan amount this year is $350,000. But our company has changed to what we call a small business lending company. It's a new SBA acronym, SBLC. And come January 1, we will be raising our maximum to $500,000. So that's great for a lot of business entities out there that cannot get the traditional lending at their local banks, that need a little bit more. Collateral, I say sometimes required, depends on the lending institution. There are some that require to collateralize if you own your home. And then there are some lending institutions that do not require collateral at all. Our institution does not require collateral. We do what is called a UCC filing, which stands for Uniform Commercial Code, and we put that on the business. And basically what a UCC is if the business happens to fail and is liquidated, the lenders that have the UCCs filed on the business are paid in the order that they have filed. So there's like a first, second, third lien position. So that's what that means. And then CDCs and CDFIs predominantly do the startup business lending. So for those of you that are entrepreneurs looking for a startup business loan, this is 9 times out of 10 where you're going to want to go to a CDC or a CDFI. Now, the minimum injection requirement, and we call it injection because you're injecting into your business. It would be the same thing as like putting a down payment on a car or a house, but we call it injection because you're injecting into your business. The percentage required is based on what the cost is to get your doors open. And that is what the injection percentage requirement is based on. It can range. You can see it's a pretty big range, 5 to 25%. Again, it depends on the lending institution. Credit unions. A lot of folks don't know, but there are some business credit unions out there, and they predominantly will do commercial real estate lending. There are not any that I have ran across that'll just do regular startup lending, similar to how a CDC or a CDFI does. And I do know that their injection and down payments will range between 20 and 30%. They're a little bit higher, have a little bit different regulations. And then, of course, we have online lending institutions. I'm sure folks have seen advertisements for companies like Cabbage, Intuit, which is part of QuickBooks. They also do lending, but keep in mind they have higher rates. So your payment's going to be a little bit higher. So I always recommend starting at your local bank, wherever you bank at. Start with them, see what they have available. You never know. They may have opened up a program or reopened. And then if you do not find there, then definitely get with your SBDC. They do have a network of the CDCs and CDFIs. I will tell you, probably all of our CDCs and CDFIs across the nation, we all inter-refer to each other because our goal is to help the small business owners finding that access to capital, and we don't all do the same programs. So anytime that I have a client that I cannot assist with my programs, before I call out and let them know, I try to find another source for them to go to and kind of pre-flight that with that lending institution. And or if I'm on the phone with them, I let them know, I don't have the program, but let me see who I can find. I prefer to help even if I can't help directly. All right, so those are our various lending institutions. So what is a CDC? Certified Development Company. We are certified by the SBA, the Small Business Administration, to administer SBA 504 loans, which are commercial real estate or large scale equipment, the Community Advantage loan, and some microloans that are guaranteed by the SBA. And then CDCs, we are private nonprofit entities. We are mission-based lenders. So yes, you have to be a nonprofit in order to do some of the different types of SBA loans. So for example, the 504 portion and the Community Advantage, you have to be a nonprofit to do that. If you go to the banks and they offer an SBA 7A loan, obviously they're not a nonprofit, but it's a different type of SBA loan. All right, let's talk about preparing for your loan request. I always recommend have a conversation with the lender that you're going to work with, because you're going to build that relationship with them. They're going to be able to help you. It's the same thing as building the relationship with your bookkeeper or your CPA. Very important. Make sure they understand what you're requesting, what you're needing. Lenders should not be putting you into any type of business loan or even personal loan for that matter, that you're not comfortable having on your books and comfortable paying. But also keep in mind, as lenders, we are also federally regulated to make sure that we don't underfund you, which means if we look at the loan and you say, well, gosh, I only want 50 because that's what I'm comfortable with. But I look at it and go, you really need 75 to get yourself through your break even. If I go with the 50 and you fail in those first couple of months, they can come back and go, you knew he needed 75. Why did you do just 50? So those are things to keep in mind. Lenders will have your best interest for your business or your startup business to make sure you're successful. We don't want to set you up for failure. All lenders will supply you a needs list of what we're going to need. Big thing here. Please convert your documents to PDF files. The reason why is when we receive them electronically, if you send us one page at a time, we can't piece it together. And we need to have it all as one file, such as your tax returns. So keep that in mind. You want to convert to a PDF. And then if you need help with preparing, you can definitely get with your lender, or you can go to your local SBDC center. They're very familiar with all of us lenders, what we need, changes. We send out updates all the time. All right. Next, what do we evaluate? This is always the big question, right? So let's talk about existing businesses. So if you're an existing business owner, as I saw, we do have some from the polls. What we're going to need is the 2 years tax return, so 23 and 22. And then a current profit and loss and balance statement for 2024. You'll receive a business schedule of debt form. You want to put just the business debt on there. Do not put any personal debt. If you're refinancing debt, because that is an eligible item, you want to include those current statements. So I'm going to pause there for a minute, because one of the biggest things that I've been seeing lately is refinancing of the MCA loans, merchant cash advance loans, really high rates. Anything over 30%, 54 was the last one that I saw. Those are things, they're quick, they're short, but they're really high rates, and they're normally weekly payments or bi-weekly payments or a very large monthly payment. So if you have any of those and it's hurting your bottom line month over month, you may want to consider refinancing those. It is an eligible item. Other things that you'll need to supply are 6 months business bank statements, and then a copy of your current lease agreement for your business location. Now, not to say we don't do home-based businesses, because we do. We just need a copy of the lease agreement if you operate from a commercial location, because normally your term cannot exceed what term you have remaining on your lease. However, if you have options to renew that lease, that makes it eligible up to that point. Most loan requests have a term maximum of 10 years. Anything non-commercial real estate. Commercial real estate can go 20 to 25 years. So keep that in mind when you're looking at your lease. If you're an existing business and you're looking to open a second location, we're going to have you do 24 months projections. Again, SBDC can help you do those. They have forms. The lenders will have a form as well if you believe you can do them yourself, which normally you can. And then a simple business synopsis of second location, what's it going to do? How's the format? How's it going to operate? What's the distance? We don't need a full-blown business plan for a second location. All right, that's an existing business. Let's go to startups. What are we going to need? 24 months projections. Basically, projections are income and expense statements for 24 months. And we say 24 months because you may launch and open March 1. So we want that projection to start from March 1 going forward. So it doesn't necessarily have to be a fiscal calendar year of January to December. And then if you're going to operate from a commercial location, we need a letter of interest. Please do not execute a lease until you've been approved for your business loan. We don't want to see anybody stuck into a lease that you executed and then you didn't get approved for the loan. So letter of interest, all landlords are very aware of what those are. It basically tells us lenders what your lease structure is going to be. If you're going to need any tenant improvements, we need a general contractor's bid. If you need to purchase equipment or furniture, servers, computers, laptops, whatever it might be, you just want to get invoices, purchase orders, or screenshots. A lot of folks buy online, we understand. And if you're doing a franchise, you're going to need a copy of the franchise agreement from the franchisor, along with the franchise disclosure document. The initial or the acronym for that is FDD. And again, the franchisor is very aware of that. As lenders, we need that. Okay, one thing very important. Projections need to be done by you. The SBDC is definitely there to help you and guide you through and answer the questions and work through them with you. But please do not hire a third-party company to do them for you. The reason being is when it reaches lenders, we're going to have a discussion at how you arrived at your projected revenue. And you need to be able to speak to those numbers, is what we call it. Okay. All right. So who needs to apply? Any owner with 20% or more ownership is going to need to apply and guarantee the loan. So what do they need to provide? We need 1-year personal tax returns, which right now, since we're past October 15th, 2023, the W-2s, 1099s, and K-1s to those. If you're going to keep your job, you need to supply a current pay stub, and that's fine. We have a lot of folks, entrepreneurs, that they continue to work while they launch their business. That's great. And then a personal financial statement, which is supplied by the lender that you're going to go through. Basically, you're going to fill out the form. And again, even existing business owners are going to need to complete the personal financial statement. And keep in mind that is personal assets and debt only. If you own a business, you're not going to put your business debt info on there, just your personal. If you're married, your spouse needs to sign it because as lenders, we have to account for all household debt. If it's an SBA lender, that is a requirement, okay? And then if you are a startup, everything that you're listing on under the section of liquidity, which is checking, savings, stocks, bonds, you're going to want to supply your last current statement because that mitigates that you have the money to inject. And remember that injection requirement is anywhere from 5 to 25%. If you rent, just notate somewhere on the section within the 4th page, there's some open blocks within those personal financial statements, how much you pay for rent every month so we can load that in. And then if you are doing a startup, you want to make sure that you attach your resume to your business plan because that's real important. We're looking for transferable management skills or background skills. So let's talk about that for a minute. If you are looking to launch an e-commerce site, we want to see that you have an e-commerce background. The reason being is launching an e-commerce site is very different from opening brick and mortar doors where somebody can stand there and direct traffic into those doors. So that's the difference between e-commerce, how are you going to get the people go to your website, versus how you're going to get them walk into the door. So we are looking for that background in e-commerce. Now, that could be something to the effect of you currently or previously worked for a company where you handled all the internet online marketing or sales. That is transferable experience. Okay. All right. So what do we evaluate? Everybody's heard, hopefully, of the 5 C's of credit, which is credit, cash flow, collateral, capital, and conditions. This is what we're looking at. Credit, well, again, we're going to pull credit with anybody who has 20% or more, including the spouses. And keep in mind that some lenders do require a minimum FICO score requirement. What are we looking at? That credit score is based on a few things: payment history, how much revolving debt you have open or available, how old your credit file is, and we're looking at the revolving and the installment debt. I always recommend that you run your credit report at least once a year. 1, to make sure it's accurate, and 2, kind of see how your FICO score is looking, okay? Now, there are a lot of lenders who do not require a minimum FICO score. My company has to be one of them. We do look at everything though. So keep all that in mind. If you need to run your credit report, I put down on the slides 2 resources for you to go to. One thing I do want to share is that this slide presentation has also been sent over to Maureen, part of Kern County SBDC, as a PDF to be able to send out to you all afterwards. So don't worry if you don't get that down if we're moving too fast. All right, cash flow for existing businesses, we're going to take into account how is the business doing. Can the business sustain the new loan request? We take into account personal outside income. So for startups, we would be looking at your projections. And then we would look to see what is your personal secondary income. So the biggest thing is on cash flow is, can the business sustain the debt? That's the biggest thing. So what is the monthly payment going to be? And then collateral is if needed, okay? Some lenders do require the collateral, like I was speaking to earlier. So if you own your home or any large size asset, there are some lenders that will attach themselves to it. And there are some who do not require collateral, like us. We just do a UCC filing, okay? Capital, these are funds that you've put into the business. How did it come about? Savings. You can utilize your home equity line of credit as long as you can sustain the debt. Contributions or gift funds. Gift funds mean they are not repayable. Okay, and again, startups, you're looking for anywhere from 5 to 30%. I just had another lender that up theirs from 25 to 30. So I actually need to go back to the very first page and update that. Business acquisition. And there's been a new rule that came down for any SBA lending, which was really great. So business acquisition minimum is going to range between 5 and 10% for SBA lenders. So if to purchase the business, if it's 100,000, but maybe you're needing some working capital to move into it, or maybe you want to upgrade the equipment, and your loan request then becomes 150,000. Your required injection is only on the 100,000 purchase price, not on the 150,000 loan request. It's a new rule that just came down effective October 1. So that one's really great. Saves you some injection money. Okay. Conditions. This is where, for startups, the resume comes into play. We want to know, what experience do you have, or transferable experience do you have in starting this business? So conditions really apply to the startups more than anything. If you don't have the experience, who are you going to bring on board as maybe a key employee, or maybe they have a very small percentage of ownership? That's fine too. Keep in mind, there are some industries that require the ownership to have direct experience. One of them is the e-commerce that we spoke about a little while ago, and restaurants. We do require that any restaurant, food and beverage lending, that the guarantors have anywhere from 2 to 5 years experience, depends on the positions more than anything. If you've been a chef, normally we'll look for at least 4 to 5 years. If you've been a general manager who's done all the inventory ordering, probably 2 years at that point. The reason that comes into play is because of spoilage, which turns around and comes out to be, bottom line issue. Okay, so that's conditions. So those are your 5 C's of credits as we go through. And then let's talk about projection-based loans. So projection-based loans are for startups, businesses adding on a second location, and for business acquisitions. We look at those to see, if you're doing a second location, how's that one going to operate? And then if you're doing an acquisition, you'll actually have the seller's financials to help you with some of those expenses. And you may notice that there's some very large expenses that maybe you're able to cut back. So if you get a business acquisition and it looks like, wow, right now it can't sustain the debt, your projections should gear towards showing how are you going to sustain the debt. All right, projections are basically an estimate of revenue and expenses. There are some expenses that will be hard expenses because you'll know what they are, like maybe rent, things of that sort, insurance because you can get a quote. But your revenue is going to be an estimate. I get a lot of folks that will ask me, well, how do you figure all that out? Well, you need to know the industry, your price point, what's your foot traffic or going to be coming in or out. And so those are all numbers that your SBDC counselor can also help you arrive at. So I always tell folks, projections cannot be done in 24 hours. It'll normally take you a good few weeks to do these. You got to do the research of the industry, your market, where you're going to be located, etc. So there's a lot of factors that come into play on these projections. So be patient, be prepared, and work through them. One website I use for a very long time, I can't even tell you how many years now, probably 15 years at least, 15, 20 years at least, is investopedia.com. And I put a link there. They give you some information about what do projections look like? Why do we need them? So in investopedia.com, you can go up into the search bar and actually just type maybe profit and loss, how to do one, how to read one, and the why behind it. So this is something nice. I love this website. All right. This is what a projection template looks like. This happens to be one of mine that I use and send out to borrowers. It's in an Excel spreadsheet. SBDC also has theirs. It looks very similar. As long as they're generic, we can use them. The lenders, you can send it over. We just can't use the ones if it's got a name on it from another lender. So ours is generic. It can be done, used anywhere. All right, if you need help with projections, again, like I said, don't rush them. Take your time, do the research. If you're buying a franchise, the franchisor normally can give you some estimates that you can plug into those projections. So they'll either provide it for you right away. If they don't, ask, and they should be able to give you some information. If you are outside of the Kern County SBDC offices, you can either reach out to them, they can direct you to your local market, or you can go to the SBA website and punch in SBDCs near me. And they can also help you with all of that. Okay, I'm going to give you some success stories because a lot of people ask me, well, what kind of loans do you do? So here's some loans that I've done this year. As you can see, I've done working capital for heating and air. I did a startup tool manufacturer who just got awarded a contract on Amazon. So that was really exciting. They just came back, as a matter of fact, last month for additional funding for inventory. And a roasting company. There's an expansion right there, the stucco and plaster. They were going into a new location. Check cashing service. This was an interesting one. This is actually down in Kern County. As a matter of fact, this one was opening his 4th location, needed equipment, working capital, and wanted to refinance some debt. So you can kind of see it varies at what you can do. And then a cigar lounge, which was interesting for what he needed to do. But you could see the amounts have varied, anywhere from 45,000 up to 250,000. So these are very different type of entities, but you could see it's a pretty varied type entities. All right, so I'm going to go through some typical questions, and I'm going to give you guys my contact info, and then I'll stop sharing and we can start asking some questions. All right, here we go. How long does it take to get approved for a small business loan? Depends on the lender. Can take up to 2 to 3 weeks and funded within 2 weeks. So about a 30 to 45 day process. What fees are associated with majority of the small business loans with lenders like the one I work for, is CDC and CDFI. They'll vary between $3,000 and $6,000. You can normally finance those fees into your loan. Or if you request the maximum loan amount, we can extract them from those proceeds. All right, next couple of questions. What happens if my payments can no longer be made? If you're doing an SBA loan, again, SBA is the federal government. They will work with you in making that loan amount whole. I recommend doing that because if you do 100% default, the federal government, you will never be able to get another government loan. And if you get any type of federal tax refund, They will take that to pay the loan balance down before you get any of it. The loans are not forgivable. Okay. The only one that was the PPP loan during COVID. Okay. All right. And the last one, what are common restrictions around business expenses that loan proceeds cannot cover? Unpaid taxes, collections, charge-offs, and settlements. Those are the four main areas that a government loan, SBA or state, cannot pay off. Okay, so those are the four main ones. All right, let's see. So here's my contact info. Have my QR code there as well. Let me stop sharing. And let's see if we have some questions. How are we doing on time too, Kelly?
Oh, we got plenty of time.
Okay, good.
What we need is plenty of questions. So it's a great opportunity to get your question answered. So you can either put it in the chat or the Q&A. We do, Penny, have one question in the chat.
Okay.
Did you see it? I'll read it. How can a debt consolidation loan be realistic if the debt you are trying to consolidate is negatively affecting your credit score? Good question.
Right. Very good question. So for all of us that are SBA lenders and do the Community Advantage program, there are options as lenders that we do. So some lenders have a minimum FICO score requirement. It's either a 620 or 640. And there's even a lender who will go down to 600. Then there are other CDCs and CDFIs, like my company, CDC Small Business Finance. We do not have a minimum FICO score requirement. What we have to utilize is the SBA scoring system. So SBA, under the Community Advantage program, has their own scoring system. What takes into effect is how you pay your bills, how much revolving usage you have, and your industry risk. So it takes in all those factors. If you have unpaid collections or charge-offs, they'll take that into consideration as well. Their minimum score requirement for lenders to approve your deal in-house, like us, we're considered a preferred lender, is a 155. If you are between a 155 and a 140, and again, that's not a FICO score, that is the SBA score system. If you're below 155 to a 140, if we as a lender can mitigate the risk of doing the refinance or equipment or working capital for the business, if we can mitigate the risk and feel strongly about the deal, we will send it directly to SBA to get a final approval. Okay, so we take a lot into consideration. We may dive a little bit deeper into the why behind it, what happened. There's always going to be questions behind it. So not all CDCs or CDFI companies do that. So, you know, our company does it because we've been around since 1978. We're one of the oldest and largest CDC, CDFIs in the nation. We have the portfolio in order to monitor all of that. Your newer, smaller CDC, CDFIs don't have that. So a lot of times that's why they have a minimum FICO score requirement. Not saying they're any less or any, you know, worse. It's just, if you have the portfolio to monitor, then you can mitigate risk that way. And that's an option that SBA gives to lenders like us. You can do the minimum FICO score requirement or you don't have to. So there are some subtle differences on this side of the street as opposed to the commercial banks. A lot of times too, I will tell you this, if you go to a CDC or CDFI and you start working with them and they're going to do the SBA program, with an application and a personal financial statement, they can run your SBSS score. That's what it's called, Small Business Scoring System. Again, it's the SBA scoring system. We can run that before we even run credit, even before you send in the rest of the package. If you feel your credit history is a little weak, we can run that to see if we even got a shot.
That's a great tool.
Yeah, I do it frequently, quite honestly, right now, because it's kind of hard to tell what it's going to come in at.
Great. Okay, next question. Can you recommend lenders that specifically service small farm businesses for operating equipment, farmland, loan mortgages, ideally loan officers that speak Spanish?
Off the top of my head, I cannot. Within the valley, we're talking down in Kern County. Madera Farm Credit normally will do small farm loans. Depends also how many acres we're talking about.
Mhm.
If it's under 40 acres, they normally call that boutique farming, and it's a little bit harder to find. Otherwise, you can always check the USDA website. They may have a list out there, and then farm loan mortgages would be the same. Yeah, let me look into it a little more, and I'll get that info over to Kelly and Maureen to get that back out to you. And that's Deborah Nares, Maureen, if we can make a notation of that, and I'll get that info.
Next question. Can you possibly accept for capital during the process of establishing your business?
Oh, can you
Apply.
apply for business during the process of establishing your business? Are
Okay.
we talking about filing your legal documentations, or are we talking about getting your doors open? If maybe, can they come off mute, or yes? Yes on the legal formation?
Yeah, I would think it'd be just during the startup phase of filing
Filing legal
documents.
documents. Okay, yes, you can. The reason is you can still apply if you get approved, when you get to loan document signing, that's where you are going to send in your legal formation docs. You just want to let the lender know, hey, I'm filing my legal formation. And then they'll just ask for those when you hit closing, and then they will draw the docs in that name. So yes, you can still do that. You don't have to wait. You're welcome. Good luck
Okay,
on
perfect.
you to starting your new business too.
Well, I see no other questions, but going through the chat real quick, there's information on the Corporate Transparency Act for what we talked about earlier, and how you can sign up at your SBDC for no cost consulting. Credit resources to run credit for your own credit report. You'll see those listed there. Also, Penny mentioned Investopedia and the website that Penny uses. It's there in the chat for you if you want to grab it while you get a chance. A little thing on Google reviews. If you like the webinar, please leave us a review. Penny's contact at CDC Small Business Finance is there. And Gil, thank you for the kind words on behalf
Howdy,
of Penny.
Gil. Oh, one thing I want to add in, I just thought about this when we're talking about cost. If you do an SBA loan and it's under $1 million loan request, SBA is continuing to waive their guarantee fee. That could be anywhere between 2 and 3% of the guaranteed portion. So it's quite a few $1,000s that you're saving. So that is all the way through September 30th of 2025. This is the 4th year they're doing this. It is their post-COVID help the small business owners. So I would take advantage of that. If you're kind of on the fence, and you want to go SBA because maybe that's the route you've been told you need to go, I would start working on what you need to work on and then get that in. So that way, we are 10 months away, but I would definitely start working on that.
Great information, Penny. Thank you for joining us. This presentation will be on our CSU SBDC YouTube channel, probably by around the weekend if you want to rewatch it, or if you just want certain parts. So for Penny Garton, I'm Kelly Bearden. We'll be back in 2 weeks. No, we won't be here during Thanksgiving Eve like we have been in the past during the pandemic. But we will be back on December 4th for another great webinar. Thank you so much for joining us. We'll see you then. Everybody have a great week. Bye-bye, everybody.